afternoon, everyone. It's a big pleasure to be here today to discuss the next wave and key trends that we see right now in private markets. To do so, I'm honored to be with two leaders of the industry, Paul and Azem. And with that, we'd like to start right away with clearly what is the name of the game in our industry, which is fundraising. And I would love, Paul, for you to tell us how you've observed the recent evolution in terms of relationship between LPs and GPs.
Thank you for that question, Marie-Victoire, and it's we're really thrilled to be here. It's something that has been evolving, and obviously we spend a lot of time thinking about. We are a Canada-based manager, generally raise between $5 and $10 billion a year. And the landscape is changing. And if I think of our LP base, I segment it between institutions and private individuals. And I'd say in general, all of them want more from their relationships. It is no longer a day of, hey, I'll send you a check and I'll talk to you again in 3 years. It's very much a relationship. And as large institutional investors are looking to consolidate their relationship, they're asking for more partnership. And what does partnership mean? I think historically it meant fee discounts, but today it means co-investments, it means insights, it means kind of bringing the full resources of your firm to help those LPs. And so, for example, some of the big Canadian institutions, we've been helping them on AI adoption, thinking about technology adoption, whatnot. In terms of families, what we're seeing is that more and more of them want, direct access to deals. We were actually talking earlier about the growth of deal by deal sponsors and family groups. And so that is a topic that we are seeing more and more of. They want access to new ideas and technology. And so things like AI access into the best AI funds or venture funds, that is something we bring. And so we focus on delivering niches in terms of investment products and then deep partnerships across technology, co-investments, and insights to our LP base globally.
Very interesting. Thank you, Paul. Azem, I'd like to speak with you for a second about your new venture. You recently launched Blue 5 Capital at possibly one of the worst times for fundraising. So it'd be great to hear the story behind the journey, that success that you had. What was your game plan when you started? What were the biggest surprises you find along the way? We'd love to hear the story.
Very good. Well, good afternoon, everyone. And thank you for being here post your lunch break. If you fall asleep, no hard feelings, perfectly fine. So first the question, how many private equity firms are there out there in the US and Europe? 4,000 in the US, 2,000 in Europe. Another question, does the world need another private equity firm? The answer is absolutely not, okay? So that is the reality which I started with just about this time last year. The reality that I will be the 4,001 potential player in the market. So you know what? The old game plan of leave and start XYZ Capital and create a very nice executive summary with your track record is not going to work. It's not going to work. Okay, we have to do something different. What is it we did differently? Number one, we sold a GP stake in Blue 5 Capital day one. Who did we sell it to? 25 hand-picked institutions and sovereign groups who we knew wanted to do something different beyond an LP-GP relationship investing in a fund. 25 names that we knew they had the capital, they had the intention to do something different, and they had the trust in the team at Blue 5. That we concluded very quickly. Why can you conclude very quickly? No one's going to give you money very, very quickly unless they know you and they trust you. And this is not an exercise that took 12 months to make. This exercise took 32 years and 12 months to make. And that is, I think, very, very important. On the back of that, we were able to make our LPs our co-GPs fundamentally in everything we do. And in 12 months' time, we are today at $8 billion of assets under management, 50 executives and 7 offices. Not a lucky start, but on the back of a structure that made sense for these group of investors. Second of all, a differentiated strategy. And our strategy is very much that south-south focus. And fundamentally, and the most important thing, is years and years of relationships of trust, which we've been able to build with many of the LPs who are today our shareholders, our founders, our friends, and also our investors in our funds.
Interesting. And was there any big surprise or things that derived from the initial plan compared to your initial expectations?
So the big surprise, and I suspect most of you in this room is the case, we all usually start our careers in the comfort of an institution, a very big institution. And after a certain period of time, you don't know, is it people are reaching out to you because of you or because of that big logo on your business card? And this is a fundamental decision, a fundamental kind of, I wouldn't call it like insecurity, but it's a fundamental point for all of us as investment professionals. Are people talking to us because I've got an Ontario Teachers on my business card, or I've got a KKR on my business card, or because of me fundamentally? My biggest surprise is the level of trust and support of individuals that when I moved from a big name to a zero name, just my name. And I suspect that one thing which I really want to emphasize is the biggest badge of honor, by far, the biggest badge of honor are the teams, the people I have worked with over the years who have actually decided to join me. And they make that group of 50, which is fundamentally 50 individuals who I have worked with in the past. And there's no bigger honor when very smart, talented people vote and come to join something which is just an idea on a piece of paper.
Fascinating. Switching gears now to Evergreen, which has been a big theme also for the industry. Is it the way to go, Paul? How do you reconcile the objectives of your traditional institutional LPs and the one of your wealth clients? It'd be great to hear you. You've been quite active when it comes to wealth.
And so first, a little bit of background. We, as a firm, really believe in the democratization of finance. And one of our strategies called Portage, we are actually the world's most active early stage fintech investor globally. We did more deals last year than any other firm. In the region here, most the digital brokers in the region here are built on our technology stack. Sarwa, Baraka, Thunder, Midas in Turkey, many of the Saudi platforms. In Canada, we built the Revolut of Canada, which is the dominant fintech in the country, and we still own 54% of it. And it's one of the most successful venture investments in Canadian history. And so that's the background for our interest in democratization of finance. By owning this platform in Canada, where 50% of new trading accounts are open in the country, we had the insight of why don't we make our alternative investment products available to these people. And so that's how we really started thinking about evergreens. And once we started thinking about evergreens, we realized, wow, this is a totally different product. And it is not just, hey, you take your institutional product and you make it evergreen, because evergreen products, they need diversification and they need liquidity. And so those two things are fundamentally different in terms of how you build things. And so we then realized we needed investment capabilities that create that diversification that we historically did not have. And that is, in the world of private equity, that's secondaries, and that's co-investments, and that's primary capabilities. And so we went out and we bought 3 firms. We bought Performance Equity Management in the United States, we bought Unigestion in Europe, and then we bought Bex in Nice to basically bring those products together and create a suite of evergreen products in Canada, the US, and Europe that meet those kind of investor needs, which fundamentally is a very different product than what we make available to our institutions. As a firm, our objective is to get to 100 billion assets in the next 4 years. We're at 44 today. The goal is to cap our evergreen and wealth products at about 15 billion, because I do think that institutional capital long-term is really important for the stability of the business. And we believe that to preserve returns for the evergreen investors, you need to keep it institutional quality, because I do think there'll be a pretty important degradation in the returns of the wealth products as they scale maybe a little too quickly. But I think by staying disciplined, by staying niche, and providing the wealth channel a complementary product to what a lot of the core managers are providing today, I think we'll be able to build a very successful franchise.
Interesting. Azem, I know it's also a client category you're targeting. It'd be great to hear you also on that.
Yeah, I'll just add one thing, which is particularly for those who are not from the region. Retail investors, it could be a family office, it could be just an ultra high net worth individual in the GCC, have a very high entrepreneurial tolerance for direct investing. And it could be across different strategies. It could be a PE deal by deal, it could be a real estate building, it could be some credit, something or another. And this is not new. Since the early 80s, deal by deal, actually even the late 70s, deal by deal private equity investments, what we refer to private equity at a later point in time, have been very, very common and prevalent. And that will continue. It's not because of costs or because of fees or what have you. There's a fundamental interest in these type of exposures, as well as obviously LP commitments and funds and what have you. How to address that and tap it into the GCC, first and foremost, it has to be local presence. Flying back and forth from New York or whatever, it doesn't cut it. And I think engaging with those investors at the property level or at the company level is a very big part. But it is a substantial pool of capital. And in my historically, that number we have quantified on the private equity as much as $3 billion per year and as much as $5 billion per year GCC capital that is going into private equity or into real estate in the West, US and Europe.
Great. If we move now to the investment opportunities, which areas do you find the most exciting at the moment, both in terms of industries, geographies? That would be great to hear you as well. I don't know, Azem, if you want to continue.
Sure. So I'll pick on three themes. First of all, geopolitics, love it or hate it, it's with us. We'll just might as well just embrace it and make the best out of it. When geopolitics creates one of the cause effects it creates is rerouting of trade. Instead of trade going, let's say, from China to the US, it's going from China to somewhere else. Instead of the US buying XYZ from China, it's buying it from other parts of the world. Rerouting of trade naturally causes a rerouting of capital. And we as investors, I hope we will be there to capture that rerouting of capital. In my organization, what we try to do is significantly focus on that GCC Asia angle. And guess what? Capital is there. LP capital from both sides of the points, from the GCC and from Asia, is there for opportunities across that bridge. That's the very first thing. The second two things, which are very specific, but an immense opportunity, first of all, everything around Sharia-compliant products and services. Sharia-compliant products doesn't necessarily only mean financial products. It's across the gamut, from makeup to blood thinners to insurance and leasing products. This is an area that has not been as well tapped into in the past. There are 1.9 billion Muslims around the world, not all of them looking for Sharia-compliant products, but a significant portion of their institutions are. And that's why investment products around those areas are a very important thing. Finally, I would say, which is very specific to the GCC, GCC has grown too fast, too quickly. And that is why you look for very small countries of only a handful of couple of million populations have something like 10 or 20 retail banking licenses, 15 insurance companies, 20 leasing companies for a population of less than 3 million. It doesn't make sense. Consolidation across financial services industry will happen over the next decade. And I hope that for us and other investors will be one of the active participants in that consolidation play.
Interesting.
It's funny, we launched a Sharia compliant product in Canada, and I was surprised at how incredibly well it did. And so you've inspired me to probably do more. But I'll stick to 3 themes as well. There's the famous line of software is eating the world. I think technology is eating the world between software and AI. I think that is a massive investment theme that will continue. We as a firm are transforming ourselves with AI, but also investing actively in fintech, technology, AI themes. It's a big passion of ours. Theme 2 is the middle market is beautiful, small is beautiful, especially in a world of geopolitics. Small local companies that have consolidation opportunities, build-up opportunities, can be very insulated from trade wars and geopolitical fights. And on top of that, they have great exit opportunity. And so we found that liquidity in the lower middle market in terms of private equity is very attractive, and it's something where we're really looking to be a global leader. And then third theme is being an owner-operator or being an active investor in real estate and credit. Lots of people invest in those sectors from, towers and big cities. We have always believed that we have to have distributed teams on the ground, able to take the assets and really operate them, from leasing teams to maintenance teams. And we think in the United States, there's a big opportunity, especially if you believe that rates might continue to come down. We see a real pickup in the real estate market right now. This year, we had the largest institutional demand we've ever had for our real estate funds. And it's something we're very excited about. And in the credit dislocation, it's going to be the same thing. Everybody's talking about cockroaches, but it really helps to be in a cockroach-full world when you're an exterminator. And so ultimately, our credit teams have deep expertise in workouts, and we're really excited for more volatility in credit markets because we gain a lot from volatility as a firm.
Interesting. And what about GCC for you, Paul?
And the GCC, we get very excited. I mean, we mentioned that we're serving a lot of financial institutions here with software. We just hired our first investor here locally to invest in fintech in the region. We think there's an openness to transforming financial services here, like few places in the world. I sit on the board of the largest digital broker in Turkey. We're actively looking at investing in the space here. It's really exciting. I mean, someone was telling me that between 400,000 and 1 million families are moving to the UAE annually. That is incredible. And in financial services, what may be perceived as the largest mistake venture capital does in financial services is they think of small markets as being small markets for financial services. In every country, the financial services industry is huge. And so you could build multiple multi-billion-dollar companies focused just on the UAE. We've done it in Canada, and I think the UAE's got a decade of creating incredible financial services companies that will be multi-billion-dollar outcomes, and we're excited to help and participate.
Great. I think we have a few more minutes. Just to conclude very shortly, you guys manage big organization. You have very strong ambitions, as you just mentioned. What is the number one thing that keeps you up at night? Very quickly to conclude, Paul.
In my case, it's cybersecurity risk. We have 3 million Canadians that trust us with their savings. We have 20 million Americans that trust us with their savings in our US business. Cybersecurity risk is a real risk. And if I were to think of something that could really hurt our reputation, we've actually had hacks. We've, had data breaches in the last kind of 2 years. Those attacks are just increasing. And so we as a firm are investing a lot in cybersecurity capabilities. And with AI, I think it's going to become even more important because I think cyber defense without AI is going to be impossible. And so I think that is going to be really, really important. And so I spent a lot of time thinking about that.
Interesting. Azim?
So I'm going to be a bit awkwardly personal. I'm always jet lagged. I'm always traveling. So nothing keeps me up at night. I can sleep through any alarm, a 7-scale earthquake. So nothing keeps me at night. However, the previous presenter, and I feel bad, I don't remember his name, he had his last slide, which I liked. He had a little sentence in the bottom in his missions and what have you. And he said, do good with a good heart. I think that's what he said. Yeah, do good with a good heart. And so I so love that sentence because I hope all of us here, and I presume most of us are either investors or looking for capital, giving capital, I do hope that every single one of us have a much higher purpose of what our intention is in life for our organizations, with our families, with our children. And that first and foremost needs to be do good with a good heart. And I think it is so well eloquently said by the previous speaker. And I hope if there is one thing keep me up at night, it is not an IRR or a leverage or a multiple ratio on a deal, what to bid. It's got to be how to myself, my partners, and my firm doing good for the next generation. And I genuinely mean it.
Great. Thank you very much.